I've been in the space for 12 years. I've been building Circle for 11 years. When I step back and look at, where we were, the ideas we had, and where we are today, it's truly extraordinary. The fact that crypto is a national presidential policy issue in the United States, kind of medium to long-term strategy, is we want to make sure that we've built the largest and most widely used stablecoin network in the world. As that grows, we believe that the scale of transactional activity and the like will be much, much larger than it is today.
I wanted to get back to the USDC Depeg. I think it happened like a year and a half ago, something like that. I was interested in the changes you implemented in your operations and mechanism since it happened.
BlackRock made a strategic investment in Circle over 2 years ago. And we also, part of that, have multiple kind of things that we've worked on from a product perspective.
I wanted to chat about tap to pay with the latest news around Apple and everything that is being developed. I think you tweeted a lot like yesterday about it. I think you've been kind of optimistic on it. So can you explain it very shortly? Hello à tous l'équipe, j'espère que vous allez bien. Aujourd'hui, on se retrouve pour une nouvelle interview. Cette fois-ci, quelque chose d'assez particulier parce que je me retrouve tout simplement avec un mastodonte de l'industrie, à savoir Jeremy Allaire, cofondateur de Circle et créateur de l'USDC. Aujourd'hui, l'USDC, c'est 35 milliards de dollars en réserve et des collaborations stratégiques, notamment avec Coinbase et BlackRock. Donc, on va commencer tout de suite. Hello, Jeremy. How is it going?
Really good. Thank you for having me.
I'm very pleased to have you today because I think you haven't been able to speak a lot to the French-speaking community. So I think this is a great opportunity to chat and also to explain a lot of things because the kind of our job as a stablecoin issuer is kind of say confused in French-speaking people's mind. Like a lot of things are not very clear. So I think this is an opportunity to explain everything and also to answer to very challenging topics and questions. So very glad to have you. Maybe before going into the questions and everything, could you introduce yourself briefly, explain what you did before Circle and also what motivated you to create Circle so far?
Sure. Thank you. So my background is in building internet software platforms and internet infrastructure technology. I first started working with the internet almost 35 years ago, before the web existed, all these things, and built multiple global publicly traded companies in Web 1.0, building some of the programming languages, application infrastructure, developer platforms that were used to build the web. Millions of developers use those products, millions of, hundreds of thousands of businesses, and then eventually worked in Web 2 in the digital media phase, building open protocols for video on the internet, platforms for two-way video, communications, things like doing television on the internet. And really, in 2012, got really interested in crypto. And I think my original background was in political science, economics, philosophy, and I was really interested in sort of the way that the international economic system worked. And after the financial crisis, really interested in, kind of the nature of money, the function of central banks, understanding how risk exists in the financial system. And really when I got exposed to crypto, it kind of brought my two big areas of interest together. That sort of how the world evolves politically, economically in terms of its systems, and how the internet evolves in terms of its fundamental infrastructure, which I'd been involved with since very early on. And so it was a marriage of a lot of things I was very interested in. And then in early 2013, started Circle. And I'll say very quickly, the vision of Circle has been pretty much the same since day one, which is we believed it would become possible to build a protocol layer for money on the internet, like we think of traditional money, like government money, like dollars or euro, that could be open and programmable and composable and would allow money to move the same way that information and data and communications moves on the internet. And that blockchain technology in particular would make that possible. It's been a long journey, over 10 years building this, but we've now really, I think, realized that vision in a very concrete way, which is really exciting.
Yeah, I think what you achieved so far is very interesting because like now I think you're the second largest stablecoin issuer in the world. You've been building like very strategic partnerships with companies like Coinbase, but also BlackRock. So I think you did pretty well. I was very interested in knowing what you were currently focusing during this summer. What are your top priorities? Like what's on your table? What's on your plate now?
Yeah, and there are several major areas of focus for Circle. I think one is continuing to build what we think of as the kind of public utility part of our platform. So we think about Circle as operating one of the world's largest stablecoin networks in the world. And a stablecoin network is actually an open platform that other people can build on top of. An end user can download a wallet, connect to that network, and use it for settlement. A developer can build an app, whether it's a traditional app or an on-chain app, and connect to it. And so the infrastructure we provide, which is primarily on top of public blockchain infrastructure, is really important. So we're really building and growing the multi-chain, multi-blockchain network infrastructure to support digital dollars, digital euros. We're building technology to make it easier for both developers and end users to transact with those digital currencies across these different networks. There's something called cross-chain transfer protocol, and more just trying to build infrastructure on the public internet that makes it easier for people to use this new kind of digital currency, digital fiat, make it much easier to use in everyday kind of transactions. So that's one big area, is just continuing to improve that infrastructure. A second really big area of focus for us is on making sure that kind of the actual money storage, money issuance part of what we do is as globally available as possible. And so we see so much demand around the world for digital dollars, and we see now also emerging demand for other currencies like digital euro, especially with the growth of regulations, which I'm sure we'll talk about. But that means for us setting up operations all around the world, making sure that we have best-in-class banking infrastructure so that one can create or redeem USDC or EURC from banking systems everywhere. And so we want to bring that liquidity out all around the world. And then we want to bring that liquidity into the on-chain liquidity world in DeFi. We want to bring that liquidity into brokerages, exchanges, others, all the places where people are going to find and access this new kind of digital currency. So there's a huge effort to just deepen and build that out. And part of that is also making sure that the stablecoins we issue continue to be fully regulated, fully compliant, and have the greatest trust and transparency behind them, which is really important all the way down to the end user, but certainly the whole ecosystem that uses this. And then the last focus, and I guess part of that is just a lot of international expansion. So we're expanding in many markets around the world. And then the last piece is we're still at the early stages of the adoption of blockchain tech in traditional finance, in consumer internet, in enterprise. We're obviously seeing more and more big names getting involved, but we're at the beginning of that. And so we've been building up over the past 2 years and growing what we call Circle Web3 services, which is essentially an end-to-end cloud infrastructure service for developers and enterprises and startups to very easily build apps that can work on the web or in mobile and that deploy against smart contracts and the end-to-end life cycle of basically running blockchain-enabled applications, because we want to accelerate the number of developers and the number of businesses that can integrate to the on-chain infrastructure world. And so that's a big kind of developer platform business that we are building up and are getting some really great traction with.
Lately, you've been tweeting on Twitter, saying that you were super bullish on the crypto ecosystem.
Yeah.
And the other side, we've noticed also that a lot of people are getting, I would say, more and more pessimistic in some ways. Maybe they are bored, or maybe they are frustrated about the adoption so far or what's been building. Are they wrong? And what makes you particularly bullish on crypto? Maybe do you see anything that we're not seeing that makes you crazy bullish?
Look, I've been working on this I've been in this space for 12 years. I've been building Circle for 11 years. When I step back and look at, where we were, the ideas we had, and where we are today, it's truly extraordinary. I mean, the fact that crypto is a national presidential policy issue in the United States, the fact that the leadership of both political parties in the US are trying to figure out how to drive a policy agenda that makes crypto a critical part of the financial system, of competitiveness and technology, that's extraordinary. We should just be so excited about that. I travel all around the world. I meet with governments all around the world. I meet with major financial institutions all around the world. And all around the world, everywhere I go, I'm finding thousands of startups and builders that are so motivated and are building things that actually work. So 3 years ago, you couldn't build things that actually worked.
So we're not patient enough.
I think so many people in this space are in it for the money, and they're in it for their tribal token. And if their tribal token is not going up, then they get depressed. And that's a real problem, right? I mean, it's like if you're building a startup and you're always worried about the valuation and, that kind of stuff,
you get distracted.
It's really distracting. And, we go through, there are these long arc market cycles, and we go through those. And my own belief is that the technology and infrastructure is incredibly strong and is ready for mainstream applications. We're extremely close. The operational tools, just like what it takes to operate with this tech, has become so much easier to adopt. The legal frameworks that are happening are basically making this legal infrastructure for not just the financial system, but for many, many other areas, for creators, for incentive coordination around different types of applications and networks, and many other utilities. So we're really, from my perspective, we're in a time right now where the technology is flourishing and people are doing really, really compelling things. I think maybe I'm also biased. I manage through optimism.
Probably like me.
Yeah. I also, I'm generally an optimistic person. And so, those are some of the things that really drive why I'm more bullish than I've ever been, for sure.
Cette vidéo vous est présentée en partenariat avec dYdX. dYdX est la solution décentralisée qui vous permet de trader les principales crypto-monnaies de manière liquide sur mobile et ordinateur. Contrairement à la majorité des exchanges, vous n'avez pas besoin de vous KYC et vous récupérez la majorité des frais que vous payez. Plus de 60 000 personnes utilisent déjà dYdX et j'en fais partie, alors qu'attendez-vous? Scannez le QR code sur votre écran ou utilisez le lien dans la description pour créer votre compte avec un simple wallet et profitez de 5% de réduction sur vos frais. Allez, on repart sur l'interview.
I wanted to talk a bit about the business model of stablecoin issuers, just like Circle, because I think so far it's not very clear for the typical retail investor. I mean, they've been using USDC, they're transacting, everything is going well. But what makes Circle profitable at the end of the day, And also something quite interesting is that USDC is kind of backed partially by T-bills. And the interest rates or at least the rates that are paid through those T-bills might decrease also in the future. So does it impact your business, those kind of monetary policy? And are you worried about this? How does your business model works and how does it evolve, including in rates decreasing environments?
Yeah, sure. So a couple things. The conceptual model to think about Circle's business is we operate a global scale internet platform utility. And that internet utility is our stablecoin network. And there are a lot of pieces to that. There's software protocols and infrastructure. There's regulated financial market infrastructure that exists that is all around the world now. There's developer platforms. So we have a platform business and it's open. That open platform is designed so that end users, developers, businesses can just connect and take advantage of it. And we've really benefited from that. So we have what I think of as really classical network effects, from more developers integrating USDC, the more apps that support it, the more utility that it has, the more that people want to use it. And so that's really, really powerful. And then there's the kind of regulated market infrastructure part of what we do, which is building up the liquidity and building up the regulated access and making sure that everyone understands that they're using a digital cash equivalent instrument that's actually legal electronic money in the issued jurisdictions where it comes from. So that's like the utility side, and we're going to continue to build that. And really, our kind of medium to long-term strategy is we want to make sure that we've built the largest and most widely used stablecoin network in the world. And as that grows, we believe that the scale of transactional activity and the like will be much, much larger than it is today. Over the past...
Like how much larger?
I mean, my philosophy is that we always believe that through public internet infrastructure, open networks, open protocols, and technologies like digital currency, that you could bring the marginal cost of storing and moving money to effectively zero. And we're actually basically there today. If you look at competitive L1s and L2s, you can transact in less than a second for less than a cent with very good throughput. And it's only getting better. And so we're kind of getting to this point where you've got digital dollar dial tone, digital euro dial tone. It's sort of up and available. In the internet, when these large internet platform utilities have emerged, whether it's in electronic communications like email, or electronic communications like text messaging, or electronic communications like video over IP, like what we're doing right now, or publishing of information, or publishing of photos, or publishing of video, all the utilities that open internet infrastructure made possible. What happened was, and I would include software distribution too, like we used to distribute software on CDs, and then eventually we do that all through apps and web apps, right? When the marginal cost of distribution goes to zero or close to zero, then the net world output of that thing goes exponential. And because you have greater utility, you have simultaneously greater utility, greater ease of use, and lower cost. So if you go to 1995 or 2000, and then you look at the growth rates of information, of software, of media, of communications, they're like, I don't know the exact number, but let's say it's like 1,000,000x larger. And
so it's the flywheel, so like the less fees, yes, the more utility, yes, the more interest in like transacting through blockchain, exactly right, through USDC.
And there's never been money that is programmable and composable on open networks. So the utility value of digital currency money that can use smart contracts on the open internet is going to be radically higher than the utility value of even like open banking money, like something in Europe, right? So you have this high utility, this incredibly different cost structure. And so the result should be over time, over 5-10 years, that the net world output of transactions that happens in the world will likely be multiple orders of magnitude larger than it is today. And so we really believe that. And we believe that if we can build the platforms, the infrastructure, the developer tools to help make that possible, we can build a lot of value, and we can build that value for ourselves, and we can build that value for everyone in the ecosystem that builds up around it. And so at a high level, we believe over the long run, there's many exciting ways for us to have products and services that generate fees for us. And we're doing more, like our Web3 services, which is like our developer platform for building these on-chain apps, wallets, smart contracts that make it easy for people to adopt this. Those have kind of like Amazon Web Service style pricing, right? So as more people do that, the more that grows. So we're constantly looking at that. And as we see different use cases for USDC and cross-border payments, FX, business to business, tokenized real world assets, all these things, we see opportunities to make money in those areas too. So we're constantly looking at ways to grow monetization. But the other part of your question, which was really about the current model, is we manage today close to $35 billion of reserves. We are required by law and by stablecoin regulations that we follow to hold that in effectively cash equivalent instruments. So around 90% of USDC reserves are held in what's called the Circle Reserve Fund, which is an SEC registered and supervised government money fund issued by BlackRock. And you can search on the internet USDXX, and you can you can see daily exactly every bond instrument or treasury repo instrument that's there. And then our cash, which is a very small portion, is held exclusively, with these sort of global systemically important banks. So the banks that are effectively government backstopped. And so we have this very safe structure. And what that means is we don't take risk, and that's the whole idea. Is we don't take risk.
You should not.
Yeah, we cannot by law. We need everyone to understand that this is this kind of digital cash like instrument. And in fact, just this week, our chief economist published a really great paper on kind of risk capital frameworks for stablecoin issuers, which is to say, even in a world where you have these very narrow, very low risk instruments, there are other risks. There's kind of mark-to-market risks in treasury bill markets. There's kind of liquidity risks with operations. There's technology risks. There's other things. So like banks, we need to hold some capital in reserve above and beyond the actual reserves as a safety net, right? But it's not like a bank where we're taking the money and lending it 10 times and hoping everyone doesn't come back and ask for it at once, right? So we have that low risk infrastructure, and we do monetize that through the reserve income stream, which is primarily just based on what the kind of risk-free rate is at any given time. Now, from our perspective, that dimension of what we do, there's a strong correlation between the sort of interest rate environment and velocity of money in the real economy. And in some ways, when central banks are adjusting interest rates, what they're trying to do is either slow down or speed up the economy. And they try to do that through kind of money velocity, making the cost of money either more expensive or the cost of money less expensive. And as they bring down the cost of money, what that does is it stimulates more money velocity, and it stimulates more capital being put to work in investments, in risk assets. And
which you benefit from, right?
Which we benefit from. That's exactly right. And so, I mean, if you look at USDC, in a very low interest rate environment, we saw extraordinary growth. As interest rates started to rise, we saw USDC decline as people, said, hey, I'm just going to sit and put my cash over here. And then as you've seen, the interest rate environment shift, as people started to expect rates to come down, then you started to see more growth. And, I think, then you had a period people weren't sure, is inflation back? And, you saw some plateauing, and then you started to see, okay, it looks like, rates are going to come down, and you start again to see growth. Now, that's not totally causal, but the important thing is that we do have some macro cyclicality to what we do, just like other major financial institutions, whether you're an exchange, an investment bank, a bank, there's all of these macro cyclical factors that drive it. And so we take that into account when we think about the business. But at the end of the day, the sort of money stock on the network, which is sort of the amount of money that's needed on the network at any given time, we think that as the network grows, as the utility on the network grows, as this grows to what we hope can be, much larger, that, of course, the money stock on the network will grow as well. And so our conceptual model is really, legal electronic money in sort of M2 electronic money globally is around $100 trillion. And we believe that stablecoin money can compete in that monetary base and can be some meaningful portion over the very long term of that form of money. And then there's other parts of this, which is the utility that you get from that money, which is all the different ways that the money moves and the money's used. And, there you have retail payments, international and cross-border payments, B2B payments. You have capital markets activity and transactions. And when you look at all of those combined, it's an enormous amount of revenue that exists from the kind of payment utility side of things. And we think, of course, what we're doing can be disruptive to that, but also can be, generate a lot of value for the crypto native firms and the people who are building on this infrastructure to provide, what we think of as a better system, an internet financial system. And so I think the builders in this space have a huge opportunity to disrupt and take share from some of those existing ways that money are used.
Understood. pretty clear. I think it's clearer for the French-speaking audience. Something that is interesting to me is that we've seen that Coinbase took some stake into Circle, and I've been kind of pushing the USDC by giving some incentives by having USDC or keeping it on Coinbase. So it kind of, at the end of the day, it's kind of like redistributing some part of the yields that you're getting. Are you planning to give away more of the yield that you get from like the reserves, the Circle Reserve Fund? And is it more like for institutionals? Is it more for retail investors? Like what's possible, what's not possible, and why did you not give away the yields you were getting so far? Is it because of the law? What are the reasons behind that?
Yeah, so legally, we are not able to pass along income from reserves to USDC holders.
Okay.
It's very clear under the law. And the stablecoin law
that makes a security, right, or something else.
That's right. So you have kind of electronic money and payment systems and payment tokens, and that's regulated by typically central banks, payments regulators, and the like. That is how USDC is regulated in the United States. That is now under the new stablecoin laws in the EU. That is how USDC is regulated, and EURC are regulated in the European Union. And the laws that are happening all around the world are basically saying these are payment tokens, digital cash-like payment tokens. They cannot pay interest. And that's designed, to clearly separate between a payment system form of money and investment product. And so there are very clear regimes for investment products, and you see people building like tokenized money market funds or things like that. And so we do not, and we cannot by law.
So it could be another type of products from Circle, right?
Oh, to do like an investment product?
Yeah.
So we're not doing that. I think what you've seen is as major companies and startups are getting into that space, they're working with Circle or they're working with USDC. So if you look at a lot of the tokenized real world assets and the growth in those, it's not surprising that USDC is sort of the primary way that people are going from kind of an on-chain digital dollar into a smart contract to get a digital token representing some underlying real world asset. And BlackRock's a great example of that. One of the largest, asset issuers in the world. And they've, worked with us to ensure that, after you've redeemed a BUIDL token, that you can receive a transfer through USDC as well. So, we see that as like a connection between traditional financial products, traditional capital markets, and those more and more of those moving on chain. And all of those are going to need digital cash and stable coins to really function. I think we're really excited in Europe about now that we have MiCA coming into force, now that EURC is legal electronic money in the European Union, and you have the CASP regime also coming online. It really creates a clear framework for traditional financial intermediaries to get in this business. And so lots and lots of different types of financial products, payments products can actually be built on chain now in Europe. So we're very excited about that. And we're hopeful that EURC can play a really big role in on-chain finance in Europe. And the regulatory clarity is critical to allowing that to happen. And we're certainly seeing more interest from traditional institutions in Europe who are now like, okay, we can now do this. Like, this isn't some, I don't know what this is thing. They can now say, okay, this is regulated. I can operate in this space. I know the rules.
Can we expect a MiCA for the US in the near term? Like, what's the timeline here? What are your views on what's happening? Do we have to wait like a long time for that? Because it kind of sounds like a mess in the US. Like, things are not clear. Things are not really moving fast forward, So yeah, what are your views and perspectives so far on what's happening in the US?
Yeah,
compared to the EU.
Yeah. So the EU obviously moved faster. and I give the European Parliament and the governments and the Commission, everyone else, a lot of credit for doing that and taking on those hard issues. The U.S. has been working. The United States Congress has been working very hard over the past 2 years on comprehensive crypto markets and stablecoin regulation. And those regulations and those laws are in a very advanced stage. So we have bills that regulate markets, exchanges, classification of tokens, and we have a bill for payment stablecoins, as they're called in the U.S. And those are in a very advanced stage. You have support from the White House. You have bipartisan support. As I like to say, crypto is a purple issue. It's not red or blue, as we say in the United States. It's a purple issue. It's bipartisan. So you have a lot of work being done by leaders, Democratic leaders in the Senate, Republican leaders in the House, and there's stuff really moving. And so the actual legislation, the laws that would set this up, they're actually quite close to the finish line, in my view. And so we're very close to all these issues. Now, you have the mess of a presidential election and a congressional election happening. And so that obviously puts a pause in anything that you're not going to get comprehensive regulation passed until after the November election. So it does create a pause. But even this week, the Senate Majority Leader, Chuck Schumer, he's the second most powerful Democrat in the U.S., you could argue. Basically, he was in a session just advancing the crypto agenda and making it very clear that he intended to pass comprehensive crypto regulation by the end of the year. And so there is a lot happening, and so it's a when, not if, and the progress is significant. And I think the political, the policy leaders are really listening to the industry and the challenges and trying to figure out how to do this in a way where you have sound regulation with good consumer protection, but also it works in terms of the ability for real companies to be built and things like that.
Avant de poursuivre cette vidéo, je t'invite tout simplement à rejoindre mon Discord dans lequel tu peux retrouver plus de 10 000 traders actifs. Dans ce Discord, on parle de nombreuses choses, notamment on va tout simplement partager nos analyses, nos graphiques, sur quoi on spécule, les différents airdrops qu'on farm, les news en temps réel qui sont partagées par exemple sur Twitter ou sur différents sites. Enfin bref, c'est vraiment un moyen d'être à jour sur ce qui se passe dans l'écosystème. Et en plus de ça, sur ce Discord-là, je vais partager tout simplement pas mal de données et pas mal de choses que je surveille personnellement, donc des données qui sont importantes à mes yeux et tout simplement moi personnellement ce que je surveille au quotidien. Donc ça permet vraiment d'avoir un suivi en temps réel de moi, ce que je regarde et comment je me positionne dans l'écosystème. D'ailleurs, tu peux retrouver mes performances de 2022 et 2023 sur tous les trades que j'ai partagés gratuitement et publiquement. Donc ici, tu as absolument tout le détail avec les positions disponibles de manière transparente, mes positions actives, mon folio, ainsi que tous les trades que personnellement je prends de mon côté avec le suivi de comment je déplace mon stop loss, comment j'ajuste mon risque, comment je me positionne, etc. J'espère que ça vous plaira. Tout est gratuit. Je vous invite à rejoindre. Tout sera en description, en commentaire épinglé. Et maintenant, place à la vidéo. How hard was it for you to comply in the EU, because it seems that your euro stablecoin is kind of structured in a very different way from your US dollar stablecoin because of its reserves mostly. So how hard was it to comply, and what kind of impact does it has on your euro token at the end of the day?
Yeah. So a couple things that are really important. The compliance with the European regime, it took us multiple years to kind of get to that point. And we set as a goal that we wanted to have both our euro stablecoin and USDC regulated, compliant, issued out of Europe on the very first day that the laws went into full effect, right? So that was our goal. And we spent an enormous amount of time
I can imagine
investing in that. And so we obviously, participated in, and provided feedback on the ultimate kind of commission rulemaking and the ways in which the standards, the more, fine-grained or detailed standards were there. We worked with the prudential regulators in France. We had the regulators across jurisdictions, the US and Europe and France, communicating about how could you have USDC issued in Europe and issued in the United States, and how do you ensure that there's fungibility? So we worked to develop this dual issuer model where we're able to rebalance reserves and have reserves that are accounting for the amount of USDC in European entities. And so it's a lot of work to do that, and technically, operationally, in terms of treasury management, banking infrastructure, and of course, the whole way that this is supervised. So there's a huge amount of work. But we are, as you know, we are the only global stablecoin issuer that is fully compliant with a dollar stablecoin that works.
How do you explain it? Well, why so?
I think we did the hard work. And I mean, part of it is that, USDC was already a very well regulated and supervised, electronic money through the US model. And so when MiCA came along, there are quite a few similarities between the kind of way in which USDC is regulated and supervised in the United States. A lot of similarities to how e-money tokens under MiCA would operate. There are differences, and so we need to kind of make sure that for the stablecoin issued in Europe, that it meets those standards. I think we have a very strong compliance operations, very strong kind of financial operations, treasury operations. We have been audited by a Big Four accounting firm for years. And so when regulators are dealing with us, it's different than dealing with a lot of other companies. So I think we put in the hard work, and I think it's important when a new regulatory regime is established. From the regulator's perspective, they need to know that the framework actually works. Like, you can actually have it work for the intended industry that you're trying to regulate. And so that's really what we've seen. And then EURC and our Euro stablecoin is now 100% issued out of France, out of our French Circle France, and it's through a Circle Europe facing product, Circle Mint in Europe. And so institutions can mint and redeem EURC and USDC directly from our regulated entity in France today.
But this money is not into T-bills, so it's not really providing yield, right? So you'll have to monetize in other ways for the Euro stablecoin. Am I wrong on this?
So the Euro stablecoin today is held in Euro cash, and the Euro stablecoin, I mean, obviously the Euro cash, there is a risk-free rate on bank deposits equivalent as well. Okay. And MiCA does provide a framework for the essentially the holding of top-rated European sovereign debt, right? Short-term European sovereign debt. So you can have, say, 90-day Bundesbonds or those kinds of instruments, right? So similarly, it allows for holding those highly liquid euro-denominated government bond instruments. So it does allow for that. We're currently not holding those. Eurocoin has been growing. It's been nice to see on-chain activity and wallets and volumes, but it's still obviously quite small compared to dollars.
I wanted to get back to the USDC Depeg. I think it happened like a year and a half ago, something like that. I was interested in the changes you implemented in your operations and mechanism since it happened. Like, what happened on your end? What kind of decisions did you take to make sure it does not happen again? And the way you made those changes, I guess, like other stablecoin issuers also made these changes or not? Like, so what are your feedback on what happens and the changes that were implemented since it happened?
Yeah, so a few key things. I think first is that the events in the United States regional banking crisis were compounded by two other factors. One was the number of actual banks in the United States that were willing to provide banking infrastructure or accounts or other things to companies in our industry was extremely narrow.
Did it change? Because that was an issue for the last few years.
Let me explain. And in fact, you had a combination of a regional banking crisis and multiple other failures of banks who were banks that provided services to like every company in this industry. And so you effectively had both, banks facing, issues on their balance sheet and deposits, and you had banks that were effectively shut down or being shut down. And all of that happened over a 7-day period.
Which is crazy.
So very, very, very extreme. Now, Circle, first of all, USDC itself never, quote, depegged. We have always one-for-one redeemed and minted USDC. That's never not been the case.
But this is something that you cannot do during the weekend, I guess, in some ways.
So, again, just kind of going back, one of the, there's reserve banks that hold, cash or then go into this reserve fund. And then there's transaction banks that are the rails that allow people to transact. And, one of the major things that happened during that time was that the primary transaction bank that was used for market participants to transact and used by companies like Coinbase and companies like Circle basically went into, it was seized by the government, essentially.
Okay.
So the ability to transact stopped. And so people got very, very, like the 24/7 model, stopped. And so that caused in the secondary market a temporary dislocation, right? So, the sort of secondary market, which is not the primary market, Circle is the primary market. The primary market effectively it was like on bank hours, essentially.
So the government kind of seized those banks which disabled you from doing the redeem process and all those things.
That's right. Now, here's the interesting thing is that Circle, because of our longstanding position as a well-regulated player with great compliance and with very strong operational capabilities, we had actually just prior to the regional banking crisis happened, we had stood up and got operational this BlackRock Circle Reserve Fund. And so substantially all the reserves were in this structure. And we were just bringing online, I would argue, the world's largest, safest cash custodian bank in the world, Bank of New York Mellon. And so getting those types of banks to support companies in this industry is very difficult. And so effectively, after the regional banking crisis, we undertook a massive effort, and it continues, to build out many additional layers of banking infrastructure in our stablecoin network. So we expanded to now have 3 distinct global systemically important banks that are custodian banks for cash pieces of our reserves. We've expanded to add direct transaction banking in every major region of the world, not just in the US. So we now have the ability to transact and create and redeem USDC and EURC out of Singapore, out of Hong Kong, out of the EU. We're adding Brazil, we're adding Mexico, we're adding Japan. We're going to add other markets as well. And so we built out a distributed network of transactional capabilities to do that. And that's really made the whole network significantly more robust. And we've continued to improve our transparency and things like that. And I can say with confidence today that I believe that USDC and Circle as a firm are the most transparent financial institutions in the world. You don't get this visibility with a bank. And so you can look very, very deeply and the attestations that we do with a Big Four audit firm every month. So that's really improved. So the liquidity is the best it's ever been. The banking infrastructure is the best it's ever been. and the whole structure has gotten stronger. And so I think when, people should evaluate companies on how they respond to crises. And I think, one can look at how we've responded and see that this has actually ended up in a dramatically stronger place than we've ever been.
On a more positive note, I wanted to talk about your partnerships, or at least relationship with companies such as Coinbase and BlackRock. So what are you doing exactly with them? How do you support each other? And what kind of initiative did you took with BlackRock on the real world asset narrative, I would say? Because this is, I think, one of the most exciting. You've been heavily focused on stablecoins, but I think there's tons of things outside of stablecoins that might be tokenized. So can you explain a bit what's happening behind the scene?
Yeah, sure. First, I would just say, we have great relationships with a lot of great companies. We're building partnerships with leading payment technology companies like Visa and MasterCard and Stripe. We're building relationships with giant consumer-facing companies like Grab Networks or giant neobanks like Nubank, and then we're working with other financial institutions like BlackRock. So we're doing a lot across different ecosystems, and then obviously in the digital asset market, companies like Coinbase, that's been a long-term strategic partner in USDC, and we have a great partnership there, and I think they're really making USDC and EURC both central parts of how they're bringing the world of digital fiat into the blockchain and into the Web3 space. So a lot of collaboration there. With BlackRock specifically, BlackRock made a strategic investment in Circle over 2 years ago, and we also, as part of that, have multiple kind of things that we've worked on from a product perspective. The first is that we worked on this Circle Reserve Fund to basically provide safety, transparency, liquidity management for these kind of core reserves of USDC. And that's really, I believe, strengthened USDC as the safest, most liquid, most most transparent digital dollar in the world. So that's been very important for BlackRock and Circle. And then the second piece is these new products in tokenization. I think our vision and Larry Fink and the whole team at BlackRock really believe in tokenization. And I think as you look at tokenization, if you're going to bring some kind of traditional investment product on chain, and you're going to bring it on chain so that smart contracts become the way that someone interacts with that asset, well, you need on-chain cash to ultimately make that work. And so given our relationship around USDC, I think they were motivated to see that USDC could be the kind of cash redemption transfer mechanism. And so we were able to work on that and have that up and running. Now that's a very new product. I cannot speak on behalf of BlackRock, obviously, and how they are looking at this more broadly. But I can certainly say when we see the kind of RWA projects happening around the world, and they really are happening more and more around the world, we see a really big opportunity for, again, well-regulated stablecoins that market participants, including regulated financial institutions, know are in fact regulated electronic money. We see a big opportunity for us to be kind of a key part of the settlement infrastructure for that to really work for retail and institutional participants.
So what you mean is that BlackRock and Circle would be kind of the infrastructure layer for tokenization, on-chain tokenization, basically.
I don't know. I mean, look, we have our developer platforms like Circle Web3 services, and those do give people the ability to manage the lifecycle of tokens, deploy and manage smart contracts, connect easily with stablecoins. And so certainly developers, whether that's a startup or an enterprise, can take that technology and build tokenization projects. And we're seeing that not just in the kind of TradFi space, we're seeing that in tokenization for loyalty mechanisms and couponing systems and game objects. And so it's tokenization is a generic technology, right? It's just taking advantage of the capabilities for provable data and
or at least you're facilitating what could happen on this side.
Yeah, I think so.
Cette vidéo vous est présentée en partenariat avec dYdX. dYdX est la solution décentralisée qui vous permet de trader les principales crypto-monnaies de manière liquide sur mobile et ordinateur. Contrairement à la majorité des exchanges, vous n'avez pas besoin de vous KYC et vous récupérez la majorité des frais que vous payez. Plus de 60 000 personnes utilisent déjà dYdX et j'en fais partie, alors qu'attendez-vous? Scannez le QR code sur votre écran ou utilisez le lien dans la description pour créer votre compte avec un simple wallet et profitez de 5% de réduction sur vos frais. Allez, on repart sur l'interview.
I wanted maybe to close this interview by talking about CBDCs because this is such a hot topic. But I think there is like huge confusion around the topic because this is quite hard to be aware of what's happening in real time regarding those topics. Like from my perspective, we can understand that like we might not have some CBDCs in the US. I'm not sure it's correct. On the EU side, might be more the case. How did the development of CBDCs progress so far in the world? And is it a threat for USDC or is it like an opportunity in your opinion, depending on regions?
Yeah, look, I mean, there's a lot of research into this area. What I can say is that in the United States, there is no effort to build a CBDC. There's no support for it.
This is not planned at all, yeah.
There's no plan. There's no support for it. And so I think the private sector led innovation in payment system technology is the predominant model. And it has been the predominant model in almost all of the West. In fact, there is absolutely a key role for central banks to play in their own core infrastructure and continually improving their own core infrastructure. So sometimes people will call that as like a wholesale CBDC, where they go from the kind of relational databases and old computer architectures and update them to use distributed ledgers and cryptographic primitives. To me, that's a smart thing. All the central banks should do that. That's just modernizing the architecture of your underlying.
But it takes so much time.
Yeah, so these projects, even at the wholesale level, these are like 5, 6, 7 year projects. So that sort of is the case. What's interesting, though, is that the major jurisdictions, whether it's the EU, the US, Japan, Hong Kong, the UK, UAE, the major jurisdictions have been prioritizing establishing clear regulations for private sector-led fiat digital currency model, aka stablecoins. So we now have in Europe, for example, while there is a research project around digital euro and it's sort of moving along. It could be 3 years, 4 years. We don't really know. The market is ready now for digital currency euro. And so on-chain, blockchain-based with good regulation is here. And so what I think we'll see is a lot of growth in innovation there and more financial institutions participating in that and payment institutions participating in that and benefiting from the global network that's being built on blockchain networks. And so that's a very powerful kind of thing that has its own kind of network effects to it. And the more advanced forms of programmability and use, and then the international use as well. And so I generally believe that open source innovation, open network innovation, free markets, competition with a lot of entrepreneurship, with sound regulation is going to produce more innovation faster way than centralized government R&D projects. And I think that is what we're seeing, and I think we'll continue to see.
Final question. I wanted to chat about tap to pay with the latest news around Apple and everything that is being developed. I think you tweeted a lot like yesterday about it. I think you've been kind of optimistic on it. So can you explain it very shortly? And also I was wondering if you plan to work actively on this or if you rely on third parties and developers developing it and just integrating USDC into it.
Yeah, so the first thing to be clear, I was highlighting the news that Apple had opened up the NFC chip for third parties. So that's all I was doing. And I was highlighting the fact that with that opening up, market participants, whether you're a wallet developer or a point of sale or a payment service provider, people involved in that could now take advantage of that. And there's now a clear way that you could implement blockchain transactions using USDC on top of that more open architecture. So that's really what I was highlighting. And we don't have a relationship with Apple. This is not Apple Pay. This is not Apple Wallet. This is, USDC's.
But
we are not launching something specifically. So just to be clear, but it was amazing to see how much excitement there is about the possibility. It was like one of the highest viewed tweets I've ever done. So to answer your question more, we absolutely want to encourage the ecosystem to do this, right? So leading wallet devs should go and get the iOS 18.1 whatever SDK and add these capabilities. But you need everybody to do it, right? You need some of the POS vendors to update their software so that if a person said I want to pay with USDC, for example, it would know how to then, with NFC, send the relevant, request information for like how much and to what address and what network. And then the wallet could then, confirm it, and you confirm it the same way you confirm in a wallet app, and then the actual blockchain would handle the transaction. But there's Apple rules on who can get access to this. And so, they're very clearly going to make sure that the wallet and is being utilized alongside, a firm that is, qualified as a payment institution or qualified as
regulated, basically, I guess.
Yeah, basically, this is within the regulated payment system activity. But there are thousands of companies around the world that can do those things, right? So I think we will certainly play a role in promoting how to do this, and we'll certainly try and work with the leading wallets to sort of encourage them to do things. And it'll be interesting. I think we'll probably see, I guess iOS 18 is official with the new iPhone launch. I don't know if it's next month or October or whatever. So it'll be interesting to see what emerges. And I think it's a great move by Apple. I remember, maybe a decade ago or a little less than a decade.
Were they forced to do it because of regulation, or is it like an initiative from
European antitrust ruling on that? It was considered anti-competitive to close that. So I think it's kind of like, if they're doing it for Europe, do it for the whole world. So, but it's a smart move, and it's going to allow other digital tokens to be used in interesting ways with NFC. So, sending or receiving NFTs, or using digital tickets or other forms of credentials, and a lot of powerful things that can be done with that. So I think we'll see a lot. Web3 tech actually really benefits from this. So it's a big deal. And like I said, I remember for a while, Apple banned any app in its app store from doing anything with crypto. There was no way. There were apps that were there, they took them all down. And they eventually opened up the app store to this, and they very clearly look at, is this, are you offering a regulated product? Are you compliant? If it's software, like self-custody.
They also want to protect their users.
Yeah,
it's clear.
Yeah, so they for a while, if you're in crypto and you want to build a mobile app, you couldn't do it. And then they did enable it, and it really allowed digital wallet apps to really grow and progress. And so I think this is another. It's a big milestone in my view.
Thank you very much, Jeremy, for your time. It's been great chatting with you. I hope the French-speaking community liked it. But I've been very honored of having you here. Maybe any last words for the French-speaking community?
Sure.
Something inspiring or that is key to Circle, whatever?
Sure. I mean, first of all, thank you for having me on. It's always a pleasure. And second is, we are very committed to the European crypto ecosystem, to growing this. We're building out and hiring a lot of people in Europe. We're building out our presence in Paris. I will be back in September in Paris. We'll be doing some events, which are really a bigger push across the continent. So you'll see a lot of Circle in France, and you'll see us all over the continent. So we're excited to be part of the community there, and look forward to seeing you in person as well.
Thank you very much, Jeremy.